What does the RBA cut mean for the housing market? Anthony Landahl from Equilibria Finance joining me now. Have you had a spike in people emailing you since the rate cut?
There's been a lot of talk about the rate cut, not only the impact on the housing market, but maybe what's to come. Look, I think fundamentally the factors around the rate cut, potentially one or two more, is the talk, as well as some of the government initiatives around helping first home buyers into the market. Look, I guess we're going to see two things. We're going to see increased borrowing capacity for buyers. We're probably going to see increased investor activity, cost of funding going down. One of the big challenges for investors is cash flow, so that helps cash flow management. I guess the risk there is we're going to see a stimulation in activity, which might drive up housing prices, which then impacts affordability.
Yeah. So, I was just talking to Phil O'Donoghue from Deutsche Bank saying that he thinks now, and he's often very right with these calls, that July is live, whereas prior to this week's meeting, a lot of economists thought the next live meeting would be August. If we are in this series of prolonged quick interest rate cuts, what does that mean more broadly for demand amidst that affordability concern?
Yeah, look, I think there is talk of another cut in either July or August. A lot of those domestic downside risks seem to have gone in terms of inflation, unemployment market. I think the governor's language has shifted a little bit to the global risks, what might happen to the Aussie dollar, the Australian economy. So, yeah, I think we are probably talking July, August. Fundamentally, that's just going to give people more to borrow. Each 25 basis points might increase your capacity, $20,000. We have 3 or 4 cuts since the first one in February. That's giving people $50,000, $60,000, $70,000 more in capacity in what they can do. A lot of the market, as we all know, in any asset class is driven by emotion. There's a lot more talk now from home buyers around what are we able to do, how are these rate cuts going to impact what I can do in the market. So I think we are going to see an uplift in demand. I think that is going to flow through to housing prices. What we were seeing a lot in Sydney was more affordable areas were holding up in terms of their market pricing. The less affordable areas, or the more expensive areas, fundamentally, we were seeing a bit of a lag. We might start seeing prices pick up across the market. People are able to afford more. People's sentiment has shifted. I think we're also seeing more investors come back into the market, and I think that'll increase as well with some of those cash flow challenges they've had. Being abated by cheaper cost of funding. So I think it is going to ultimately impact house prices. There might be a lag. It might also be in concert with some of the government policies that are coming in. Supply just can't keep up fundamentally.
Yeah.
There's a big lag in supply catching up to demand.
Almost out of time, but very quickly, I just saw a Cotality note about auctions expected to spike this weekend. So to your point as well, sentiment has very much been driven by this cut.
Auctions are up 20 or 30% since we had the Easter break and the election. More supply coming on the market. We're going to get more home buyers as well. So I think we are going to see a trend with house prices increasing over the next 6 to 12 months.